Welcome back to Topic Tuesday with Alan Dembski and Juliana Jansen from Buffalo First Wealth Management. We got a great topic today. We'll be talking about the One Big Beautiful Bill. But before I get into that, we are not providing tax advice. Everyone's situation is different. However, we are going to do a quick overview, but make sure you talk to your personal tax advisor for any specific questions that you may have that we talk about that might apply to your personal situation.
And the bill was sweeping and covered a lot of issues. What we're going to talk about today are the tax changes that take effect for tax year 2025. There are a number of changes that take effect starting for tax year 2026, but we're going to focus on the filing that we're going to all be doing within the next few weeks.
And we're going to start with the big topic of conversation was the SALT deduction, your state local tax deduction. It was capped at $10,000. However, they have increased that to $40,000, which people in high income tax states like New York are happy about. However, there's some things that you really need to know about when you look at the SALT deduction. It is capped, like I said, at $40,000. So your income tax that you pay through your paycheck and your property taxes are capped at that $40,000 for individuals in New York, or individual tax filers, I should say. So if you got to play the numbers, are you going to hit that $40,000, or are you still going to, if you're married filing jointly, that deduction still $31,500, which many people might not get over that. That's still a lot of money for that standard deduction.
Yeah, it really depends on what your income level is and how expensive your local taxes are.
Right.
But the nice thing about if you do qualify for the increased limit, SALT limit, it does open other deductions that if you were just itemizing, you couldn't put on your taxes, such as charitable contributions, such as mortgage interest, as well as healthcare. Now, healthcare costs do have some pretty hefty minimums, but if you're subject to those minimums and you make those minimums, then all that can be added in once you met that state and local $40,000.
Right. So for just a quick example on the SALT, if your state income taxes, you paid in $10,000 and then your property taxes were another 12, here you have 22,000. Last year you were capped at that 10. Now you can go up to that 22,000 in that brief example.
Yeah.
Which is nice. And then, like you said, all your other expenses that you have there as well. The other thing that I want to touch on real quick too is the deduction for tips and overtime. It is very confusing to say the least, but not all your income is excluded there. And your tip income is limited up to $25,000 deduction. And your overtime is actually $12,500 for an individual, $25,000 per married husband and wife. Back to the tips, and it's $25,000 per return. So if there's two people in the service industry that does qualify, you have to have qualified tips in order to take advantage of that deduction. And again, it's not a deduction, it's not a credit, and it's not erasing all your income for that.
And the overtime just is so in the case of someone that's getting paid time and a half, they wouldn't get the exclusion on the time, only on the half part.
Right.
So it's only
so if we used this example yesterday, your time and a half. So if you're $20 an hour and then your time and a half overtime, you bump up to $30 an hour. It's only that $10 that falls into that exclusion. Right. It's not your entire pay that falls into that exclusion. Yeah. That's a very good point.
So you have to look pretty closely at it. Another very talked about, there was a whole lot of discussion during the passage of the bill that they were going to not tax Social Security. Well, in the end, the bill, it does not eliminate taxes on Social Security, much as a lot of our seniors would like, but it does implement a tax deduction for seniors age 65 and up. And it's a $6,000 per senior deduction. And again, subject to income limitations. So once you start making above certain incomes, which we won't get into because this would be a 1 hour video if we did,
Right.
once you get to certain income levels, it starts to phase out.
Yeah, and that senior deduction is very confusing for seniors. I think that would be one of the most popular calls that we've been getting is, oh, my Social Security is tax free now.
Yeah.
However, you could fall into that 50 or 85% of your income being added back in to your AGI at the end of the day as well. The last thing I think we just want to touch on where a lot of people are confused is the new auto loan deduction. That is capped at $10,000. There are some limitations, a lot of limitations on that. $10,000 you have to have as far as interest paid. So I would think at 5%, you're probably looking at a $200,000 car to max that out. It has to be built, or final assembly needs to be done in the U.S. There are resources online that you can Google if your car does qualify for that deduction. But there is a lot of limitations, and some cars that you think might qualify might not, and vice versa as well. Anything you want to add in closing here?
Well, I think and I touched on this briefly, I think when we were putting this video together, we realized that the income limitations are very different from deduction to deduction. So,
Yes.
The senior has a different one from the other deductions that we talked about, the tips and the overtime. So you really kind of need to dig in to see where your income falls and what deductions are going to apply to you and what deductions you're going to not qualify based on your income levels.
Right, and some deductions will apply to state and some will not. So even though the federal government passed the legislation that it'll help you on the 1040, those deductions may not carry over on your state income tax, depending on the states that you live in, and any additional tax deductions on state.
Yeah, that's a good point.
So state specific to wherever you're watching this video from, you have to check with your state income tax department as well. So that concludes our video for today. As always, stay tuned for our next video. If you have any comments or want to add anything, certainly post those on our social media channel.
Yeah, we're always looking for good topic ideas, so feel free to post that in the comments.
Yes, absolutely. Thank you very much, and stay tuned for the next video.